Good day to all. In this today's Jana's coaching class, we have to know about the adjustments in accounts. So it was already stated that the three cardinal rules are there. What are the three cardinal rules? These are already we have dealt with. What are the subjects? Three cardinal rules. Number one, real account, personal account, nominal account. Then real account, debit what comes in, credit what goes out. Personal account, debit the receiver, credit the giver. Nominal account, debit all expenses and losses, credit all incomes and gains. These are all the three cardinal rules for any accounts. Any accounts, that is in financial accounts, this is a must. One, those who are all qualified, the 10th plus 2, BCom, MCom, then MBA, ICMA, Chartered Accountant, Associate of Company Secretary, whatever the qualification you are all fulfilled, these three cardinal rules will not get changed. So this has to be applied for each and everything. This has to be applied. Under these circumstances, for each and every transactions in the business, or company or whatever it may be, the journal entries we are preparing. Journal entries means this account debtor to this account. You have to mention the amount and you have to give narration. Narration is nothing but the exact transactions, for what purpose this transaction is being prepared. This journal entry is being prepared. Then after journal entries, the ledger accounts we are posting it. So for example, rent account debtor to bank account means rent account, so debit side, credit side in ledger account, rent account debtor to bank, you have to mention the amount. In bank account, you have to, in credit side, by rent account, you have to mention the same amount. The same amount you have to mention, otherwise the trial balance will not tally. So after preparing each and every journal transactions, you are posting into the ledger. After posting into the ledger, you have to yes, match. You have to match. That is tally. Then the to balance carried down, by balance brought down, like that the transaction we have to give. Then we have to prepare trial balance. Trial balance means the list of accounts, debit side, credit side, debit balance, credit balance. So here rent means expenses. So debit column, the amount will be there, total rent amount. Like that each and every transactions, the listed transactions are posting in the trial balance as debit and credit. While reconciling, while totaling this one, each debit and credit should tally. If that is not tally, means that you have done any mistake is there. What are all the mistake? That is called error. Errors of principle, errors of commission, error of omission. All these subjects we already dealt in. You can see it in a playlist. All these chapters we have covered. Partnership account covered, companies accounts covered, everything we have covered. And also at that time it was given the adjustment entries. Adjustment entries while preparing trading profit and loss account, balance sheet, the adjustment entries have to be posted correctly. These adjustment entries, that is mostly what are all the adjustment entries will be there. Even some people they qualified the academic qualification or professional qualification, the persons are having little bit confused in the adjustment entries. See, these adjustment entries are normally coming into the accounts. That is outstanding expenses. See, every financial year, that is called starting from April and ending at 1st April to 31st March. This is the financial period. So if it is in for the March month, the salary will be paid by the business or the company to the worker or the salaried person in the next month. But the adjustment entries we have to prepare in the accounts this outstanding salaries, salary due to the worker or employees, this much, outstanding expenses. So this much, that means what we have to do in the trial balance, the salary amount was given. So that salaries in trading and profit and loss account, under that profit and loss account, to salaries, inner column you put the amount as mentioned in the trial balance. Then add outstanding expenses, add outstanding salary, you put that amount. In the question paper it will be given outstanding salary. So that outstanding salary amount, that also will be added with the salary amount as given in the trial balance. So trial balance salary, add outstanding salary, both are in inner column. The total should be in outer column of the profit and loss account. Here that one portion is over. The other portion has to be completed, then only the balance sheet will tally. So for that balance sheet means two sides. One is liabilities and another one is assets. In the liability side, you have to indicate or mention outstanding salaries. Say for example, outstanding salaries, total amount for 3,50,000 means 3,50,000. So salaries as given in the balance sheet 2 lakhs. Then add outstanding salaries 3,50,000, 5,50,000 outer column. Here in the liability side you have to mention as outstanding salaries that amount. This is outstanding expenses. Then depreciation. What is the depreciation? This also we already covered in the chapter. You can see it in a playlist. So what is the depreciation? Depreciation is nothing but the diminishing in the value of assets due to wear and tear of the machines. So here in that particular period, you have to calculate the depreciation percentage is there. This is the percentage. There is so many methods are there. Straight line method, diminishing value method, like that the depreciations are calculating as per the accounting policy of the company. So as per the accounting policy of the company, you have calculated the depreciation amount. That depreciation amount, say you have to plant and machinery, depreciation, plant and machinery, depreciation, building, like that you have to indicate separately, and the amount has to be given in the outer column, the total calculation amount. So in the asset side, for example, building 25 lakhs, inner column, less depreciation, for example 2,50,000. So 25 lakhs minus 2,50,000, here the outer column, the net amount has to be entered. Similarly, this depreciation has to be posted in P&L account by mentioning separately and deducting it from the assets account. Number 1, prepaid expenses. What is prepaid expenses? See, for example, the company will pay the insurance premium for the stocks, STOCK, in the company's goods. For that, November to October, 30th November they may take the policy. 30th November to then 31st October or the last date. The last date that date will be taken for whole year. In the whole year, so our accounting period ends by March. So we paid excess for the some 4 months or 5 months or 6 months. That amount you have to calculate. What is the total amount of insurance? This much. For divided by 12 into the remaining period. For example, if it is from June means July to June, that means my accounting period ends with March. So April, May, June. That total amount insurance divided by 12 into 3. That is the prepaid insurance amount. That amounts you paid in advance to the insurance company. That you have to exhibit in the accounts. That you have to show as in a prepaid insurance. Insurance amount less prepaid amount. Like that you have to say outer column you have to indicate the amount. And in the asset side you have to say prepaid insurance. What is that? Separate portion, that 3 months portion, no, that you have to say this is the prepaid insurance. Then only liabilities and assets will tally. Similarly, for example, pre-received also for non-profit organization, that is societies or club or whatever it may be, in temples, mosque, church, whatever it may be, non-profit organization, in that pre-receipt, some persons they will give the subscription or the charges in advance for the development of the concern. So for that purpose, accounting periods ends with March. So any person gives the extra 2 month or 3 month amount, that extra amount has to be shown as a income. That you have to deduct it here and you have to show it in a liability. Here profit, loss, expenditure, income, transfer to balance sheet. Here profit and loss, you are preparing profit and loss account. At that time net profit is there or net loss is there. Under such circumstances, if it is a profit making company, this adjustment how you have to carry over to the balance sheet. In the balance sheet, liability side, share capital less drawings, then one figure will be there. Along with that, add profit. If it is a loss, less loss. Then the net amount has to be exhibited in outer column. If it is a non-profit organization, expenditure income, excess of expenditure over income, excess of income over expenditure. This has to be dealt similarly like that. Okay. Then drawings as already stated in the point number 4. These drawings, any amount they have given separately, then you have to deduct it from the capital as in the balance sheet liability side. Total amount capital, authorized capital, paid up capital, called up capital, like that. That paid up capital less these drawings, that inner column. Then only the profit or loss has to be added or deducted and you have to show as a separate amount. If you done this one correctly, then only you are grasping the accounts very fantastically and you will appear in all the your companies extremely well and you will be much appreciated by your boss and everybody, and it has to be grasped very quickly. If you are having any clarification, you may also ask in the comments box here. And okay friends, I think it is very much useful to you. We can see in a next YouTube video channel. Thank you.